just looking at Bitcoin right now, sitting at about 62k, and you've got people calling for this is the next parabolic bull rally. We're going to go on a crazy bull run, and this is it. It's going to be now, and I just don't think we're going to see the altcoins pop like they did in 2021, and I'll show you why. You'll see on Google search terms, if you type in Bitcoin, you can see this is since 2004. So obviously you've got a few spikes in 2013 for that bull run, some in 2017, some in 2021, and right now we're sitting at about a quarter of what we were in 2017. Institutions are getting involved and they're buying 10 times the supply, but I just don't think altcoins are going to pop like people are calling for, and it's because retail aren't involved. Yeah, institutions are going to get involved in Bitcoin, Ethereum, and they're going to get the ETFs for them approved more than likely. Or, well, they have for Bitcoin, but more than likely Ethereum in the summer. But retail isn't here to pump all your altcoins. And if you just look at Bitcoin dominance, Bitcoin dominance has been in an uptrend since November of 2022. And if you overlay US interest rates, you'll see it's been in an uptrend since the interest rates actually went up. So it's interesting to see when interest rates fall, we start to see things like Google search terms go parabolic, pushing the price of Bitcoin up because people have more money to get involved in cryptocurrencies. And you can also look, for example, at YouTube views. So these are like the top crypto channels. So you've got like Benjamin Cohen, Coin Bureau, Altcoin Daily, like the big channels. Their YouTube views are still sitting at like a quarter of what they were when retail was involved. So just another thing to look at to indicate that retail's not here, and they're not here to pump your altcoins. So what is my strategy? Well, I'm just DCAing Bitcoin until I see three things. Until I see Bitcoin dominance starting to top out and downtrend, because that's when altcoins pump, because liquidity's fallen from Bitcoin over into altcoins. Also looking for Ethereum Bitcoin to bottom. Ethereum Bitcoin's doing what it did last cycle. It finds itself a bottom and sort of bounces around this level. And you'll see, if you overlay Bitcoin USD, it was actually a Bitcoin rally that broke it off support. We're hovering around that support level right now, and Bitcoin's pumping, so you could see Ether Bitcoin break from its support level, and then for the next few months until interest rates arrive, well, interest rates cut, we could just see Ethereum Bitcoin bottom. So Bitcoin right now is on a rally, so we could see Ethereum Bitcoin break off its support level and sort of consolidate for the next few months. More specifically, the market expects rate cuts in June, 84% likely in July, so more than likely for the second half of this year, we're going to see rates cut slowly. And then maybe 6 months after that, we might start to see like the altcoins pump. So it wouldn't surprise me if we see something like this. If we just consolidate for a bit, Bitcoin continues to pump, we go to 60, almost 70k as institutions are still buying, breaks Ethereum Bitcoin from its support level, and we sort of consolidate until, let's say, November this year. The end of this year, we start to see interest rates cut, the Fed increase their balance sheet, Google search terms starts to increase, YouTube views start to increase, and then we see retail come back, and we can durably see altcoins outperform Bitcoin. Now, you can pick out a few examples where altcoins are actually outperforming Bitcoin. Just look at Solana. Solana's had a great move. So total 3 is the total market cap of cryptocurrencies minus Bitcoin and Ethereum. But you also take away your stable coins. So minus USDT, minus USDC, and divide that by Bitcoin. That's a more accurate index of all the altcoins. Again, not even near the support level. It's found itself a bottom here and it's actually bounced. So it could be another few months as Bitcoin continues to rally until we see altcoins break from their support levels. And that's what I'm waiting for. I'm just going to continue to DCA Bitcoin until I see them fall off their support levels, until we see Google search trends go up and YouTube views go up. Then I might consider switching my Bitcoin over into altcoins, but until then, I'm just going to sit tight. And I think that is a perfectly good strategy, and just something to think about for the future as well is, how are you going to get out of the market? If you're getting into the market thinking I'm going to time the bottom, you're probably going to try and get out of the market by timing the top. Now, I made a mistake earlier this year. I bought the majority of my Bitcoin in this highlighted area. So I bought the majority of my Bitcoin here in September 2023 and ended up selling it when we got closer to the 618, because I thought, every previous cycle we've never broken the 618 before the halving. So me being a genius thought, I've timed the top, I'm just going to sell now. I'll take that, what did we move, 60-70%, I'll take that 70% return, I'll buy it again when it's low. But that's just not realistic. Like, this has shown us that cryptocurrencies are extremely volatile, and they don't necessarily need to follow cycles of old. Each cycle is going to be brand new. Each cycle has different factors that are contributing to the price movement. Obviously, this cycle you've got institutions getting involved, which is obviously pumping the price quite a lot. Could we see 30 to 60% pullback? 100%. I think so. And I think we're probably due one of those. Am I going to try and trade it? Absolutely not. Absolutely not. I'm just going to keep DCAing until I see those things come in. So going back to my point on how are you going to get out of the market, start DCAing out of the market. When we start seeing all-time highs, we go to 80k, sell a portion of your bag. We see 90k, sell a portion of your bag. 120k, sell a portion of your bag. I think trying to time the top would be it's wishful thinking to think that you're going to time the top. It's not an orderly sort of, come on guys, out this way, time's up, sell your bags now, please exit the market. It's PvP. There are going to be retail that start to come in. When the people who are searching on Google Bitcoin and the people who are watching YouTube videos on Bitcoin, those are the people that we're going to end up selling to when the time comes. These are the people that are getting in late and they think it's just going to go up forever. But the people who've been holding for a year know it's not going to go on forever. It's almost like a game of musical chairs. The music stops eventually and there's not going to be any seats. And you're going to ride all your bags back down to zero. So I think DCAing in and DCAing out is a perfectly good strategy. Yet, it's not the most efficient. You're not going to get the most yield that you possibly could. But what are the odds that you're going to time the bottom and the top? It's very unlikely. So that's my strategy going forward. Obviously, the Labour report gets released, I think it's Monday or next week. So we'll see what happens with the price then. If the labour market starts to print a very scary story, then we could see a crash in the price. But obviously, we'll see how that goes, and I'll probably make another video when that happens. Yeah.